Easy Does It, a podcast by Easy Equity.
The big one, I think it was 65% of investors at the time said, please add residential property. As a 47-year-old white male who comes from a privileged background, I didn't really get it. And because I've always had access to property. But when I looked at it through the lens of our investors, 29 and 31-year-old South Africans, it became obvious. They don't live and work in the same places. They're aspirational about where they're going to own assets and therefore where they're going to own property. And so taking that insight from our customers, myself and Elmira Oosthuizen sat down and said, listen, we can do this. We can crowdfund for property. We can create a platform that democratizes access to all things investing in terms of property, and essentially give people all of the benefits of property ownership without the hassle.
Easy Does It, a podcast by Easy Equities, where we simplify money and investing. No jargon, no complications, your cool guide to investing.
You are here.
I'm here and excited to be here.
Welcome. Thank you so much for affording us the opportunity.
Yeah, listen, it's my privilege to be able to speak to you all, and thanks very much for taking the time and the interest.
Thank you so much. I was just having a small little pre-party before you joined, and then I muted myself.
I thought that you were muted.
Yes. So I muted myself before I incriminate myself. So everybody, I just want to say welcome to the space tonight. I want to thank Charles for accepting the invitation. This has been a day coming. I think Charles will elaborate a little bit later, but this has been a day coming in the Purple Group. For me personally, this has been, I am extremely, grateful to the Purple Group, to Easy Equities, for everything that they have done and that they are doing, and we are going to explore later through my questions that they will be doing for the investors that look like us, that sound like us, that come from where we come from, that all of the above. Okay, so I know Charles is extremely passionate. Him and his team are extremely passionate about investing, about democratization, about, education that they want. I know, and, that it is all about responsible investing and growing this huge community. And I mean, when I say huge, I mean 1 million out of 60 million. Charles, we have not started. We have a long way to go, but you and me are going to chat about that later. I just want to say welcome, everybody. This is the Purple Group 2021 financial results audited by BDO. We are not making this stuff up. This has been audited. This is the numbers, the 691% up on PPE, on Easy Equities, the 200, the 300% on the entire Purple Group. Guys, you guys know me. If you are in the space and you follow me, you know I have taken a fine-tooth comb through that entire integrated report, and I know all the numbers. So, Charles, from the bottom of my heart, and I think every investor here, I want to say thank you for the opportunity. I can go on and on forever, but I won't. I just want to say thank you for democratizing investing. None of us in this room, I don't think, maybe one or two of us could afford to buy a whole Amazon share, but last time I checked, I can't afford $3,000 for a share. And Easy Equities is the only platform where I can buy pieces of shares, where I can have a vote, even though I own 10% or 1% or 0.01% of a share. Easy Equities is the only platform in South Africa where that is possible. So from the bottom of my heart, I want to say thank you. And I want to say a huge congratulations to the entire Purple Group team. I know some of the businesses, and we will talk to people, did not fare as well. But I think the mother business, Easy Equities, we'll talk to GT24 later and we'll ask our difficult questions. But the mother of all the businesses, Easy Equities, did really, really well. And you did us really, really proud, Charles. So to you and your team, and a huge thank you. You have not let the investors down. We promise we don't have paper hands. We're going to have diamond hands, and we're going to talk about the 10 Rand plan later. What you can tell us, of course. If you can't tell us anything, we'll take what you can tell us. But for now, Charles, I just want to say welcome. Thank you to the rest of the Easy Equity team. I see Rupert is down there. I see Sasha is down there. So the rest of the Easy Equities team, I know Carl is probably also here. Guys, we cannot say thank you enough, and we'll say thank you again towards the end. But let us take this. Let's start this conversation. Charles, is there anything you want to say, just as an introduction, before I start with my questions?
Yeah, Saul, I mean, so many things to respond to that you said. I mean, firstly, the thank you really belongs to you and our community of investors. I mean, without you, there would be no business. And it really is on the shoulders of our investors that this business is built. So the first thank you to you and all of the investors that have filled our platforms and our minds and ideas with things that we needed to do to achieve all of this. The second thing is there are lots of members of my team on here, too many to mention. I can see them in the space. Big ups to them. I mean, what they've managed to achieve in the last 2 years, in COVID, in lockdown, working remotely, it's just extraordinary. I mean, words fail me at this time. And when we sort of, annual reports are an opportunity to look back, I guess, because that's what they do. But really, we mustn't look back too much, because what we've achieved is, whilst as incredible as it is, and the real opportunity sits still a long way out. And somebody asked me this year, why do we do this, and what do we want to be remembered for? And for me, 100 years from now, I want someone to look back and ask the question, what changed the financial fabric of South Africa? How did it emerge to be one of the wealthiest nations in Africa, if not the world? And I want the answer to be, it was Easy Equities 100 years ago. And so for us, it really isn't, whilst we celebrate these results and we're very, very proud of them, we've got such a big job to do still. And it does feel like we're just getting started. And I know for those who've been around and with me, and they're on here, guys like Aneelan and Brad and Tristan, who've been with me for like 15 and 20 years, this might feel like a destination. We've been doing it for so long, but it isn't. It's just the first stop on the journey. So thanks to everyone, my team, you, the investors, my shareholders, and every single person, our partners. I can't leave them out. I mean, what incredible partners. Capitec, Discovery Coming, Telkom, Bidvest Bank in the early days, Satrix. Huge thank you. And I'm going to take a sip of wine and look forward to your questions.
Thank you for that, Charles. You definitely have amazing partners in this. And I think I speak for everybody. When I am sitting and I am on the ETF, the comparison tool that you guys have, and I'm comparing Satrix to One Invest, and I'm comparing Satrix to Signia. I obviously know you have built these relationships and you have amazing partnerships, and the tools that you guys are providing to us in terms of education and making informed decisions is next level. So I'm not going to hog the conversation. I think a lot of the people want to hear you. They don't want to hear me. They listen to me all day on Twitter, shouting and screaming at them. But just from my side, I have a few questions. For me, the first thing I want to know, when I looked at these results, they are beautiful. The first thing I asked myself is, what is the absolute highlight for Charles Savage, the man, and then for Charles Savage, the CEO of Purple Group? What is the absolute highlight for you of this financial year?
Sol, give me 1 second.
No problem.
Right, I think I've solved that problem. Now I'm stumbling around in the dark, trying to find a chair. Okay, I'm back. So your question was around what are the really highlights in the numbers or in the results for me. Look, I want to start with the one that you identified, because when we started Easy Equities, there were less than 1,500 retail shareholders. And you saw the numbers in the results there, somewhere near 50,000 retail shareholders, and they have control of the group. And when you want to democratize something, you've got to also democratize yourself. And that number really just stood out for me this year. That number has got really big over the last 2 years. And it's wonderful to know that all of the value that we've also created for our customers, because all of those shareholders are on Easy Equities. They're not sitting on other platforms. Those are investors that bought into our promise and into our purpose, and went and not only bought shares from other companies, but bought our shares too. And so they've been so heavily rewarded, and a lot of wealth has been created in our share price trajectory from 30 cents, when we started, to where it is today. So that was the one highlight. And then I think, and that's me personally, the numbers in our financials, and someone on Twitter really identified, there are two key numbers that I think everyone needs to understand. The first is our cost of client acquisition. And, that is at 50 Rand a customer. It gives us so much leverage to grow faster and more aggressively into the future. I mean, it really is the magic in our acquisition. It's the magic in our marketing. It's the reason that we're profitable. And the key kind of understanding from that number is that the reason it's 50 Rand is because of all of you. Those who are big fans of the platform know that if you refer someone, the person who arrives gets 50 Rand, and the person who referred them gets 50 Rand of brokerage. So it shouldn't be a surprise that it costs us 50 Rand for you guys to acquire new customers. So that number is amazing. I mean, it's literally close to 1/50th of the cost of our competitors, and it's the number that will undo a fintech. If you don't get your cost of acquisition right and really low, then you can't run a low-cost scaled platform. So that's the second number. The third number, and it's a number that the trajectory is also going down. It's the cost of servicing our customers, and that continues to come down. I think this year it was around 30% down from last year. And that's, you have to consider that in a business that is scaling super fast and handling it all in COVID, we're still managing to grow the business and scale it whilst reducing the cost of service. And that really means that we've got extraordinary leverage over our cost base. It means that the more customers we get, the more profitable we get, and the barriers to our profitability are getting lower, not higher. So, as the CEO, those two numbers, cost of client acquisition and the cost of servicing our customers, those are, if you like, those are the foundations that will ensure we've got extraordinary leverage in the group going forward. And as we add customers, their economics will flow straight to our bottom line.
Charles, those two numbers got me really excited, by the way. I cannot believe that the cost is 50 Rand per customer, because I was like, okay, so you're paying me 50 Rand per customer and you're still averaging 50 Rand per customer over the entire 1.1 million clients. That is something that I really have to commend the team on. It means you guys are doing something seriously right that I don't even think you have competitors. People might disagree with me, but I don't even think that any company in South Africa right now is playing on the playground where you are playing. They're on a totally different merry-go-round, where it is costing them probably 10, 20, 100, 150 times more than what you said. So those numbers are amazing. I looked at the increase in revenue versus the increase in costs, and I was like, Purple Group is doing something that your competitors are not doing. But Charles, those are the numbers that you are very happy with. Those are the things that you have achieved in this financial year, in FY21, that you are very happy with. I want to know, is there anything that you wanted to achieve, you as a group, as Purple Group, is there anything that you wanted to achieve in FY21 that you did not, or something that you regret?
Yeah, look, and my team they're probably gonna hate me for saying this, but the first thing is that we've pushed our team so hard. I mean, they're running at kind of 130%, and because of that, our focus was 100% on scaling easy equities. When something gets big on you this quickly, you've got to marshal all of the troops and make sure you keep lifting it. So the disappointment for me is that we didn't launch another business. In 2020, we launched 2 new businesses. We launched Easy Properties, we launched Easy Australia, and we set some real momentum around launching new businesses and leveraging our distribution base and also widening our competitive mode. So I guess I would have liked to have launched another business, and it wasn't because we didn't have them lined up. We do have them lined up, but I took the decision that I really couldn't throw more at my team. They probably, and that's why I think they're going to be disappointed with me, is because they probably will tell me that they could have handled it and I should have done it and all those kind of things. But I think we all needed a bit of breathing room, and we needed a really sharp focus on ensuring that the opportunity that was being presented to us in easy equities, we didn't drop that ball. And as a result of that extreme focus on easy equities, I think you can see it in the other businesses. We've dropped other balls, and we stand accused of that. And that doesn't bother me that we stand accused of that. We've got an extraordinary opportunity here in easy equities. We're a small team, just 120 people. We've got 1.2 million customers, growing at 60,000 a month, and that's where 130% of our focus was. So I would have liked to launch another business this year, but I'll make up for it next year, I promise. We won't launch 1 next year. We won't launch 2 next year. Maybe we'll launch 3. Maybe we'll launch 4. But it'll be somewhere in those numbers.
I'm not gonna bug you and ask you what those businesses are, because I think that if you put them on the back burner to excel easy equities, I'm happy. I'm a content shareholder, Charles. I'm okay with you doing that. Running your team at 150% over lockdown is already a huge thank you. It's already a huge thank you to the rest of the team that's on this call, that's on the space. What you guys have achieved in easy equities, if it was at the expense of launching another business or another venture or another idea, I think we are okay with waiting. Charles, we are in this for the long run, so let them breathe, Charles. Even if they don't want to breathe, tell them the shareholders are okay with them breathing and with launching multiple businesses at the same time. We are okay with that. But thank you for that. I think just knowing that our CEO and that the businesses are, the people inside the businesses are working really, really hard, and they're pushing, to bring us more of what we are investing in. That's sufficient.
Just to interrupt you there a second. A sort of funny anecdote. Some of them have been working so hard. Like Neelan, he hasn't had time for a haircut in 18 months. So we've actually given him time off to go get a haircut, because his profile pic, which I'm looking at now, his hair's about 16 inches longer than that, and we're hoping that we've given him enough time to now go have a haircut and sort out his hair.
I'll tell him to find a really good Pakistani barber and a really good massage after that. Charles, let's get into the good stuff. Okay, we know what your highlights. You have beautiful highlights for the year. We know what your one regret is, and that is giving us more acquisitions. We certainly love growing through acquisitions, but let's go into the income statement. You released the trading statement last week, and everybody went crazy. We were like, OMG. Easy Equities Purple Group is going to go up by 700%. And this is just looking so great. The one thing that, and the numbers are amazing. Please don't get me wrong. The one thing that I noticed was, obviously, last year's results, we had the option to acquire Easy Crypto. And it was just an option last year. It was DCX10. So now you've acquired DCX10, and it's Easy Crypto. And profits are up heavy. But you have a 50 million rand in your income statement, Charles. That is a non-cash item. Is that once off, or are we going to see it again? And I know Gary's not here. I would have loved for him to be here so I can find him. But we see this 50 million, and it's really inflating profits.
So let me jump in there. It's firstly, there are rules around how you treat assets, and if we could have not revalued that option, we wouldn't have, but the auditors insisted that we do. And that's because that business has just, the value of that option has just been exponential over the last, 12 months. And I think everyone can understand what's happened, or everyone understands what's happened in the crypto market, how successful EC10 has been on our platform. And so the auditor's response to all of that was, we have to revalue it. Now, yes, it's a once-off, because we're not going to revalue it again. It will now be consolidated into the group, and what will replace that once-off value is the income and profits attributable to that business, which are not included in the current financials. The view you've got to take is, what's the value appreciation of that asset in the group over the next 3, 5, and 10 years? And so, for us, the 50 million is certainly obviously a once-off, but the value that business is going to bring to our income statement over the next 3, 5, and 10 years is going to be, multiples of that 50 million. Just as an example, the last 12 months, that business produced kind of profit before tax of around about 8 or 10 million. So when you consider that it's a 50 million rand revaluation, which would give it an enterprise value, because that's for 51%, of around 100 million. That revaluation was pretty conservative. It was a sort of 10 to 12 times multiple on earnings, on profit before tax. So it's a conservative revaluation. If we had wanted to push it higher, we certainly could have, but we didn't. We wanted to be conservative with it. It's got a massive role in the future of the group, and it will show earnings in its first year, very considerable earnings into the group. And we're taking a long-term view on crypto, and I think it's going to be a massive participant in the group going forward. And whilst it's a once-off once-off write-up of the asset, the view that everyone's going to take is what kind of revenue will that produce over the next 3, 5, and 10 years?
That is definitely what I wanted to hear. Is crypto? This is not a crypto space, so I'm going to behave. But I just wanted people to understand that the 50 million rand is a once-off, and in future years we will see that 50 million will translate into what Easy Crypto is going to bring into the Purple Group. And we don't know, obviously, Charles, we don't know what the 50 million is going to be in future years. But with me being a crypto bull, and I think a lot of people in this space are invested into EC10, but we're going to talk EC10 later. So I just want people to understand that, that 50 million is the option, that now from 13 August, Easy Crypto is in the Purple Group, and from now on, we own 51% of Easy Crypto, and the revenues that come from there, that's our PPE. That's our PPE holding. So thank you for that. Charles, the part in the letter from the board, that talks to your, and it's official now, you are not in the closed period anymore. You can talk to us about, because we did your surveys, we filled in all your surveys, and obviously you came out with the top 5, and they are Easy Lending, Easy Insure, Easy Trader, Easy Retire, and Easy Asset Management. I filled it in obviously for me and my daughter, because Madam is not going to fill it in for herself, but Easy Lending is definitely, Easy Lending and Easy Insure are the 2 products of Easy Equities that I am the most excited about, because firstly, lending, that is a huge space, guys. For anybody, we know borrowing, lending, that is what happens in an economy. That's how we make money. And for a shares platform to say they are going into lending, Charles, you need to break it down for us. What does it mean for us as investors? Easy lending, in the most simplest terms, what does it mean for us as investors?
Just out of interest, those weren't the top 5. We just put some ideas in there so that you didn't have too much foresight. But the bottom line is that there was some very strong input from the community that are going to drive our business development in the future. And Easy Lending is certainly one of them. So what is it? Easy Lending is the combination of a couple of things. Firstly, that's where scrip lending is going to end up. So lending out your own stock and earning your share of that lending revenue is where you'll be able to turn that on or off. The second part of it is that you will be able to borrow from us and against your portfolio security. So you'll be able to take loans on the platform to buy more shares, and those loans will be at a very low rate, so around about prime. You'll be scored based on your portfolio diversification and liquidity. So if you've got a diverse portfolio with deep liquidity, you'll get a higher score. And then we'll obviously have to credit score you as well. And if you've got a high credit score combined with a high portfolio score, then you're going to get a much lower cost of lending. But fundamentally, what we've learned from our customers is that they take money out for emergency events, and then they bring the money back. And the problem with that is every time they do that, they create these tax events for themselves. So what we want to do is create an infrastructure that allows you to take money out, but doesn't force you to sell shares when you do. And so it doesn't create this tax event. So that's the second product that will go inside Easy Lending. The third product, and the name for that product in the market is called margin lending. That's the kind of acronym or name that they give it. And fundamentally, margin lending's been around for 50 years, but it's only available to the super wealthy. So all of the richest people in the world, they all use margin lending to access capital. It's the lowest cost of capital for them, and they don't have to sell their shares and create a tax event. They can borrow money against their portfolio. That's the second product that'll go inside Easy Lending. And then the third one is actually term loans. So again, you will, in this instance, you're going to take money out, but not to buy shares, potentially to buy other assets. And we will create term loans. The length of those term loans will be based, you will have the discretion to say it's 12 months, 16 months, 48 months, whatever you like. And what we've realized is that this young customer audience want to buy assets. Now, I'm going to use my son, and I don't know if he's on here, but I'm going to use him as an example. I mean, he's been on Easy Equities from the start, and he wants to buy a car. But in order to buy a car, he's going to have to sell his purple shares. But he doesn't want to sell his purple shares. If he sold his purple shares, he creates a tax event. But by keeping his purple shares and us lending him money and essentially creating a term loan against that, he can have the best of both worlds. He gets a low cost of capital, he gets to keep his shares, and he eliminates the need to create a tax event on those purple shares that have gone up 300-400% in his portfolio. So that's Easy Lending sort of broken down for you. The ability to lend out your stock and earn an uplift on your portfolio, the ability to borrow money and buy more shares, and then the ability to borrow money and buy assets and pay that money back over a fixed term period that you decide for yourself. And the thinking is that you're banking yourself. And if you think about banks, what do? They take your money and lend it out to other people. And what we're doing is taking your money and giving it back to you, using your security, your shares as security. And by doing that, we can eliminate a whole lot of margin and give it to you at a much lower cost of capital than anyone else. So really excited about launching Easy Lending. And I think our community are going to love it. Because all of you are creating wealth. And what you don't want to do is start selling shares to buy other assets and creating tax events when you can avoid that. So looking forward to launching it.